All right, so welcome to Spinoff Investing Simplified's video series about spinoff investors. Our goal with this series is to help you, the individual investor, learn more about spinoff investing from people that actually do spinoff investing. This series of videos is brought to you by StockSpinoffinvesting.com. The owner of StockSpinoffinvesting.com, Rich Howe, is our guest for this series, and we're glad to have him here. Welcome aboard, Rich.
Thanks so much, Craig. Thanks for having me.
All right. So as we get started, just want to let the audience know us a little bit better. You and I both have children that are learning how to ski right now, and you were saying that you're having a little bit of trouble getting your daughter to. She didn't have a very good experience on the ski slopes.
Yeah, exactly. So she's 4.5, and I love to ski. I'm not an expert skier by any means, but I enjoy it, and we go up to Vermont, New Hampshire more often than not. New Hampshire to in the winter it's pretty miserable in the Northeast, so it gives you something to look forward to go skiing. And she didn't like ski school at all. Didn't have a great experience, so I'm going to. I don't want that to scar her, so she's doesn't want to ski again. So I think next time we'll probably I actually snowboard, but I'll probably just rent skis and try to teach her myself how to ski, so that we can be together and it's not as traumatic. But I don't know. You have some kids, right, that are skiers?
Yeah. So I just taught my 6-year-old how to ski this year, and it was my uncle that gave me the advice. First, you have to be super positive and just super positive over and over and over again.
Mm-hmm.
I don't try to put too much effort into it with them this year. I was like, hey, we'll take you on to the bunny hill. We'll just do the bunny hill the entire time. And then by the end of the day, I was like, hey, do you want to go on the big hill or not? And
Mm-hmm.
my uncle gave me some great advice. He said to have a little tether or a rope between me and him. And I held him on that rope so that he could get the confidence of going down the hill. The problem is towards the end of that day, he got to a point where he was going so fast that I couldn't stop quick enough. And so after that point, I was like, okay, looks like we're done with it. Now you need to remember how to turn. And so we focused on turning. He biffed it the first time. It was terrible. But I got into a point where I started singing with him. It's like Dory, Daxton. Just keep turning, and he started singing that as he went down the hill. That's how he went down it. He by the end of the 3rd day skiing, he got to a point where he could turn on his own, and he didn't fall down going down. So I mean, these are it was a lot of fun. Go ahead.
Oh no, yeah. And sorry, you were breaking up a little bit, so I couldn't quite hear what you said to finish. But yeah, that's amazing. 3 days, and he was pretty much could ski.
Yeah. So the thing you focus on is the turns, and I told him to put his arms out, and then that automatically forces you to lean into your turns, like instead of plane. And then I sang the song about Dory, and so. I hope that things go well with your daughter, because I mean she's 4, so she's a little young, isn't she, or not? I don't know.
Yeah, we'll see. We'll probably try again this year, and then if it doesn't work this year, we'll try it again next year.
Okay.
Yeah, some of our friends have 4-year-olds that are skiing, so we want to make sure that I don't know that she has that experience and eventually kind of can actually ski and can stop. I mean, we don't need her to be an expert by any means, but we'd like her to be comfortable.
Yeah. Well, that was my goal with Jackson, but I can't. I've never felt comfortable taking him up on the hill until they're. Well, he was actually a lot younger than I expected. I did not expect to take him up until he was 8. So he's 6 now. So you know how it is.
Yeah.
It's kind of exciting. So. Well, let's get our audience into talking about spinoffs today. So, Rich, we're bringing you on because we want to talk about frameworks. So, kind of where would people start if they're interested in investing in spinoffs, and what is your framework that you use for spinoff investing?
Yeah, so the spinoff framework, I guess, is always evolving. Um, what I like to do is I mean, this is my full-time job, so I have the time to do it, but I basically am analyzing, every announced spinoff that's been announced in the US. At some point, hopefully I'll expand to totally globally. But what I want to do is I basically want to review each spinoff, try to do a deep dive to get a sense of, what business is being spun off, um, what the parent company is going to look like, and to get a sense if it is a business that I would want to own at the right price. The way I'm doing that, pretty basic stuff. I'm reading the financial filings, the quarterly filings. I'm reviewing the presentations. I'm jotting down notes so I can call investor relations and clarify some of my questions. Of course, the Form 10 is a big document that every spinoff is going to publish, and so I'm going through that. I'm reviewing that. When you're just focused on spinoffs, all different industries have spinoffs. So I'm not a sector specialist by any means, and that can be a little bit challenging at times because you don't want to walk into an industry like energy, for instance, where unless you have a lot of experience, like you can get burned. And I definitely have some lessons learned in energy, especially the energy services space. But for the most part, I mean, I'm trying to do the analysis that I would do on any stock to determine if it's a buy or not. Reviewing the financials of the company. Has the company, is it making money? Is it growing revenue, or is revenue shrinking? Is it in an industry that's in secular growth or secular decline? Like obviously, even if obviously you want to avoid companies that are in industries in secular decline. I would say even if the valuations look super cheap, my experience has been that more often than not, it's harder. It's a harder way to make money. Is the business capital intensive? The less capital intensive the business, the better, because that business will have higher returns on capital. So that's something that I'm definitely looking for. Let's see, what else? The parent, the new management team of the spinoff, where did they come from? Do they come from the parent company, or do they come from outside? My experience has been that more often than not, if you get a management team that has come from the parent company, you're going to, there's going to be less of a risk that there's some big shock or big guide down once the company becomes independent. Oftentimes, the parent company wants to bring in some high-flying outside management team, but I found in terms of my experience that the best management teams usually are the ones that have been at the company before, because they know where the low-hanging fruit is. They know the areas where they wanted to invest, where they maybe couldn't because it just wasn't a priority for the senior management team. They know the areas where they can cut costs. So that's one other thing that I'm definitely looking for. How competitive is the industry is something that I'm looking for. So, when you're searching for a Form 10, you just search for competition or competitors, and it'll take you to the section on the competitive landscape. Every spinoff will say, our industry is fiercely competitive. That's just kind of boilerplate language for the filings. But you want to get a sense of what are the competitors, and then you can look at the stock charts of those competitors if they're public, see how they've done, look at their margins. If they're razor thin margins, then it's a very competitive industry. But then the other nice thing about looking at the competitors is you can figure out what companies you could use in your valuation framework. So just a simple example, if there are 5 companies that are all public and they traded in, at a range of EBITDA multiples of between 8 and 10 times, then you can probably pretty safely assume that, this company should trade at between 8 and 10 times EBITDA. So those are some of the questions that I'm always, looking for when I'm reviewing my, the Form 10 and all the spinoff presentation, if there's been one. I'm constantly jotting down questions. And then, usually as I continue to read, sometimes those questions will be answered. But then if they're not, that's when I'm reaching out to investor relations to get a sense of, to try to get those questions answered. That can be a really quick way to get ramped up on a company. Sometimes investor relations isn't the best about getting back to you, but sometimes they're really helpful, and sometimes there hasn't been an investor relations person hired, and so you get to speak to the management team, which is also very, very helpful. In terms of my framework, I'd say I also like to focus on smaller companies. I've looked back at the data, and the returns for companies that are less than $1 billion in market cap, vastly outperform their larger counterparts. But the lower you get in market cap, you can get some silly returns, like under 50 million market cap or under 100 million market cap. Obviously, that's going to depend on your liquidity. If you're a big fund, you can't play there, but if you're an individual investor, you can. And so I found that to be a really fun area to look at. I tend to focus on those small and micro cap spinoffs. Those are my favorites. And then I would say, just to kind of summarize, the best situation is when you've done a ton of work and you say, okay, I like this company. We don't know what it's going to be trading at, but I think it's worth, $2 billion, $3 billion. If it were to trade to us at a significant discount to that price or that valuation, I would like to own this company. And then oftentimes, as well, when a big company is spinning off a smaller division, oftentimes because there are a lot of index funds that own the big company, the smaller company is sold indiscriminately. So like my favorite situation is a company that I've done a lot of work on. I would like at the same price, at the right price, and then it starts trading and it just starts dropping like rock. Those are the best situations. Now, they don't come around all that often. Contour Brands is an example of a spinoff of VF Corp, where that playbook happened exactly. It was a company with very solid cash flows, pretty defensive, a good brand, a lot of low-hanging fruit, started trading in the when issued market at 40. And then, within a couple of weeks, it was down below 30. And then the nice thing is that if you had done your work ahead of time and you had just read the filing, you would have known that they were going to pay a $2.24 dividend. And so, at its low, that equated to over an 8% dividend yield, which is just really unheard of in the consumer space. You just don't see dividend yields that high. And so there's just very low risk, buying a stock when it's been sold for indiscriminate reasons, and they have the confidence in the cash flow that they're going to be paying this very solid dividend. So they don't always work like that. And unfortunately, you have to follow them all. And then, once in a while, you'll get that great situation. But that's generally my framework for looking at spinoffs.
Awesome. So I'm just going to summarize, make sure that I got everything.
Yeah.
It sounds like you're looking for good businesses, and that is kind of where you start. And then after that, you're looking at the management team and kind of, are they going to be successful at executing that? Then it looks like you look into competition and identify where the competitors lie and what kind of margins they have. Then you start, after you're doing all that, or as you're doing all that, you come up with questions about the business itself. And if you don't have those questions answered by either the reports or interviews with the management team, that's when you go to investor relations and you approach them and say, hey, this is what I want to do. It sounds like you like to look at smaller companies just because there's a higher upside available. And then finally, it looks like the research is what allows you to mitigate some of that risk that you're concerned about with investing in spinoffs. Is that a pretty good summary, or did I miss anything?
Yeah, no, that's great. And then the only other thing that I would say is being a generalist. As I said, you're investing in energy and then apparel and then healthcare stocks, and it's you can't be an expert in every industry. But what has been helpful for me is, again, this is not rocket science, but searching on Seeking Alpha for articles about the company. Some are, not very good, but some can be helpful. Searching on Value Investor Club, you don't have to be a member of Value Investor Club. You can read all the investment theses on a 30-day delay. So that, if anything's been published on an upcoming spinoff, I always check that out. Also, I don't know, if you have access to any broker research. So I trade through Schwab and Credit Suisse. We get basically access to Credit Suisse research through Schwab. So that's actually a really nice perk. I don't rely really on sell side research much, but for when you're looking at a company and you don't know the industry and you don't know really the background, I mean, a sell side initiation report or a recent report ahead of the spinoff can be incredibly valuable. So I guess those are other, you know, resources that can help you to answer, you know, the questions that you've been jotting down as you do your preliminary work.
Awesome. Hey, thanks, Rich. You just answered a question that we didn't even think we were going to discuss today, but you know, where people might do some of the research, that's a great one to do. So Seeking Alpha, Spending Your Time in Value Investors Club, I've looked at both of those sites. I do like Credit Suisse, and TD Ameritrade also gives us some Credit Suisse information, at least on the parent, maybe not on the sometimes. And then, yeah, I mean, those are great resources that you can typically get if you have an online brokerage. It sounds like TD Ameritrade will be acquired by Schwab someday soon, and that'll be an interesting. And we'll all be under the same umbrella. We'll see how that works.
Exactly.
So, how did you develop this particular process? So, say somebody, they come in, they want to invest in spinoffs. Where would you recommend they start? What kind of books would they read? What kind of mentors might they have?
Yeah, so I think I'd say the first thing is just experience. So don't be afraid to learn by, you know, making investments. And, you know, basically starting, there's a lot of great free resources about spinoffs. You know, I have a free, you know, spinoff calendar, so you can see the upcoming spinoffs and you can try to do your own work and, you know, see if, you know, it looks like there's an interesting opportunity. I mean, there's a couple of ways there. I mean, probably a lot of ways that you can make money. My favorite is investing in a spinoff that's being indiscriminately sold. So you're a more informed buyer than the seller who's selling for non-economic reasons. That's, you know, my favorite. But you can also invest ahead of the breakup. So, you know, obviously spinoffs are announced at least 6 months in advance. And oftentimes you can do your work. And even up until the spinoff date, you know, it's pretty clear that the stocks, that the parent in the spin on a sum of the parts basis is trading at a discount to its, you know, value, or it's what you think will be its fair value after the spinoff. So, you know, invest in some spinoffs, follow them. If you think it's compelling ahead of the breakup, don't be afraid to invest ahead of time. And then, I guess the one thing that you're going to be aware of when you're investing yourself is it's very easy if you have some losers to just like forget about it or lose interest. But I would urge you to keep a journal or maybe start an investment blog. You know, starting a blog, publishing your thoughts holds you more accountable because you're putting your thoughts out into the world, whether or not, you know, and more often than not, somebody will stumble upon them. And it's also very helpful to go back and to review to see your lessons learned. But maybe, you know, if you're a newer investor and most of your money's, you know, in diversified mutual funds or ETFs, you know, keep the majority of your money there, but maybe, you know, take a couple $1,000 out and invest in the spinoff, do your work and learn from there. You know, I think that is, you know, ultimately the best teacher because the lessons that you learn will really be instilled. And so I think that's really important. In terms of other resources, so Joel Greenblatt's book, You Can Be a Stock Market Genius, is a great book on all sorts of special situation investing. I know you've read it. You know, it has a great chapter on spinoffs, the whole thesis of why spinoffs tend to outperform. And that's the biggest chapter in the book, but they also he has other chapters on different types of special situation investing. And so that's an excellent book. It's like, you know, $12 on Amazon. I've read that book, you know, at least 3 times, because you can always, I think I have the, you know, the spinoff chapter pretty well kind of almost memorized, but the other special situations I'm still getting more ramped up on. And so it's a really good book. It's entertaining. It's the great thing about Joel is he's able to really simplify things that are pretty complex, but he makes them simple, and he's a pretty funny writer too. So it's pretty entertaining. It's a pretty light read. In terms of other resources, I would just say that let's see what else. Clark Street Value. I don't know. Do you know that blog, Clark Street Value?
So I've heard of Clark Street Value. I haven't read a lot of that stuff.
So he's been publishing for like 10 years. He's got a really good track record. It's all free. And he writes about a lot of special situations and spinoffs. So that's a great free resource. You can go back and, just follow the blog, follow some of his write-ups, just get a sense of his investment thesis and the ones that have worked out or not. But another good thing that he does, I think that's pretty good, is he doesn't simplify it too much. I think one thing when you're a new investor and you're thinking about investing, like there's so many rabbit holes that you can go down to, especially if you're trying to build a financial model. And my advice is just like try to keep it simple. Is the business growing? Is it a good business? Can you value it? Like, are there other companies or companies that have been acquired that kind of can help you get a framework for whether this company is over or undervalued? But I think Clark Street Value is a great free blog. Seeking Alpha again has some good articles. I would also say, on Twitter, I use Twitter. I never used Twitter when I was working at my previous jobs, but as an individual investor, it's really helpful. There's a lot of really good free stuff that's published and great folks that publish their ideas and a lot of special situations. And so I found that's an incredible community, and I met a lot of cool people through Twitter as well. So I would say that's those would be my my areas of, or I guess a couple places you could start in terms of framework. But I would say that the most important thing is just doing it. Just try it. Don't invest too much money because you could be wrong. Not all spinoffs outperform, but something that you'd be comfortable losing. And then as you gradually increase your confidence level, you can just increase the amount of money that you're allocating towards spinoffs.
Yeah, absolutely. All right. So again, I'm just going to summarize for everyone. This is so first, experience is going to be the number one thing. But as you said, recommend that we start with small numbers. Don't try to throw all your retirement account against some sort of spinoff. That's a pretty wise thing to do. And then second, start with Joel Greenblatt's book. If you haven't already read it, read "You Can Be a Stock Market Genius" by Joel Greenblatt. And then you gave a couple of different websites, Clark Street Value and Seeking Alpha. Those are some great ones to look at. And then Twitter, that's a new one for me. I'm going to have to look into that one. That's kind of interesting.
Yeah, Twitter's awesome. It's surprising, but it's a really good. And basically what you just do is you search for a $sign and then the ticker of the stock that you're interested in. And you can see there's a lot of garbage on there. So there's a lot of let's see, kind of bots that are like trying to get you to click on different like scammy articles, but you can easily kind of sort that out and focus on people who have actually like written interesting things about that stock. And then, if somebody else is interested in the stock or writing about a stock that you are interested in, they're probably interested. You're probably interested in, by definition, similar kind of businesses and similar kind of special situations. So then you can just follow that person, and that's kind of how I've built out a list of who I follow. But yeah, it's surprisingly helpful.
Nice, very nice. All right, well, cool, Rich. I appreciate your comments. And one final thing that you did talk about is journaling your things. And for next week, that's actually what I was hoping to talk about. So if you're up with it,
yeah, that would be awesome.
Next week, and we'll talk about journaling. That's something that I have, on your advice last year when we talked, I spent some time working on it, and I was like, you know what, this is definitely where I need to focus some of my effort. So
that's great. Yeah, no, would love to.
Yeah, awesome. All right. Well, in conclusion, for the audience, thanks guys for watching our video on spinoff investing. If you liked our discussion, you're welcome to support us in a couple of ways. First and foremost, you can go to Rich Howe's website, stockspinoffinvesting.com. I will give full disclosure, I am a subscriber to Rich's investment column here and through that website, and it does have some great things on it. Second things you can do, you can go ahead and like this video on YouTube for the YouTube algorithm, and you can also go ahead and subscribe. And then finally, you can go ahead and leave a note, leave a comment for us. Let us know if there's anything that you guys would like us to discuss during our series here on stock spinoff investing. Thanks a bunch for all your work, and we appreciate your time. Full disclosure on the last side, or just on the law side of things, Rich and I made this video for entertainment purposes only, and any discussions about specific companies made in this video are not a solicitation to purchase them. We recommend that you conduct your own research prior to committing any funds to an investment, and as they say in the Hunger Games, may the odds be ever in your favor. Thanks a bunch, guys.